Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY26 earnings conference call of Religare Enterprises Limited, hosted by Adfactors PR. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Ms. Mansi Bodas from Adfactors PR. Thank you, and over to you, Ms. Mansi.
Thank you, Rutuja. Good evening, everyone, and thank you for joining us today to discuss Q3 and 9-month FY26 business performance. We have with us management of Religare and its subsidiaries. Before we proceed with this call, I would like to mention that some of the statements made in this call may be forward-looking in nature and may involve risks and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect developments that occur after the statement is made. Documents related to company's financial performance, including investor presentation, have been uploaded on the stock exchanges and on the company's website. I now hand over the call to Mr. Pratul Gupta from Religare Enterprises Limited. Over to you, sir.
Thank you, Mansi. Good afternoon, ladies and gentlemen, and welcome to Religare Enterprises Limited's Q3 FY26 earnings conference call. I am Pratul Gupta, CFO of the company, and I'm happy to host this session, marking our continued commitment to transparent engagement with investors and analysts following our first call, which happened in November 2025. In the room, we have senior management from Religare and its subsidiaries. Today's session will cover detailed updates before transitioning to Q&A. I refer to the presentation already before you since it has been uploaded on BOSS. It is also available in IR section of our website. Referring to slide number 5, business overview. While some of the audience may have seen this slide earlier, I would just like to refresh everyone's memory. Religare Enterprises serves as the listed holding company, CIC, with stakes in high potential financial services business across Care Health Insurance, which is India's second largest standalone health insurer, Religare Broking, which is into retail focused securities broking along with e-governance business, Religare Finvest, the SME lending platform, and Religare Housing Finance, which focuses on affordable housing. Moving to slide 6, the group structure is as depicted in the slide. We have listed Religare Enterprises, below which there is Care Health Insurance, wherein Religare Enterprises holds 63.2% share. We also have a wholly owned subsidiary called Religare Broking Limited, which in turn also holds Religare Digital Solutions Limited, which is its wholly owned subsidiary. The SME platform Religare Finvest Limited, which is another arm of lending segment, is a wholly owned subsidiary, and Religare Housing Finance, Housing Development Finance Corporation, is a significant subsidiary which is below Religare Finvest. Religare holds majority strategic stakes across insurance and financial services platforms, which we believe are ready for growth. Moving to slide 7. At an industry level, the quarter ended December marked a broad-based performance across India's financial services sector. The NBFC ecosystem demonstrated resilience with industry AUM growth. Capital markets activity continued to benefit from strong retail participation and sustained domestic SIP inflows, supporting broking and asset management businesses. For insurance businesses, after a brief hiatus due to GST changes, the activity returned back with a lot of vigor. With respect to the business environment for REL businesses for Q3 FY26, we navigated a mixed operating environment during the quarter. Our performance reflects disciplined execution across our diversified financial services businesses. The group results this quarter absorbed one-time employee benefit provisions related to past service liabilities. Excluding these non-recurring items, our core operating performance remains stable, supported by healthy franchise momentum. As a diversified platform, we continue to see opportunity from the strengthening credit cycle and supportive policy environment. Our approach remains deliberate, focused on building strong operating foundations rather than chasing short-term growth. We have focused on governance via board reconstitution as well, with 3 promoter nominees added in July 2025. Further, the board has proposed the induction of 3 promoter family members, Dr. Anand Burman, Mr. Mohit Burman, and Mr. Aditya Chand Burman as additional directors, along with Mr. Jimit Modi from Samco Group as additional director. They will be designated as non-executive and non-independent directors, subject to necessary regulatory approvals. We have also strengthened leadership across the group. We have Mr. Vijay Goel joining as Managing Director of Religare Broking. Recently, we also welcomed Mr. Babu Rao from Bajaj Finance as Group General Counsel and Group Chief Compliance Officer, and Mr. Indranil Chaudhary as Group CHRO, who earlier served as CHRO for UTI Mutual Fund. REL continues to maintain a strong capital and liquidity position, it providing flexibility to its operating businesses to support growth, drive stabilization, and pursue value accretive investments. Capital allocation during the quarter remained measured and selective, aligned with each subsidiary's requirement. Our focus remains on preserving balance sheet strength while providing funding support to businesses as per their growth plans. Our priorities continue to be allocate capital in line with risk-adjusted return potential, reinforce governance, operating discipline, and risk controls across all businesses, and position the group to compound value over medium to long term. Business-specific observations are summarized in slide 7 across business segments, including insurance and financial services. Now, let me give you a snapshot of income statement. At the consolidated level, the company clocked a total income of rupees 2067.9 crores against 1670.2 crores for the corresponding quarter last year. I am on slide 8. On a 9-month basis, the income reported is rupees 6033.1 crores against income of 5355.6 crores for the same period last year. The total expenses for the period were rupees 2171 crores and a negative PBT of rupees 103.1 crores. The corresponding number for last year was a negative 78.9 crores. On slide 9, we have segmental reporting. In terms of segments, the insurance business clocked a revenue of rupees 1931.9 crores, whereas financial services were at 143.1 crores. The profitability for the insurance segment was a negative of 111.2 crores, whereas financial services reported a profit of 8.5 crores after accounting for one-time line items, including wage code provisions as well as write-down of investments in case of RFL. The corresponding assets and liabilities are also detailed on slide 9. On a standalone basis, referring to slide 10, the total income was rupees 2.4 crores against a total expense of rupees 13.8 crores, leading to a loss of rupees 11.4 crores before tax during the quarter. Just to remind the audience, the numbers pertain in case of standalone only to CIC Holding Company. We will now dive into the performance of each business, starting with Care Health Insurance, and I would like to hand over the floor to Mr. Amrish Jindal, CFO of Care Health Insurance Limited. Over to you, Amrish.
Thank you, Patul. Good afternoon, everyone. This has been a transformative quarter for India's insurance sector. The Insurance Amendment Bill was passed during this quarter, enabling 100% FTI. Also, this was the first full quarter following the GST exemption on individual health and life insurance policies, This exemption has materially improved affordability for customers. We also saw the new labor code come into force. Highlights for the quarter are our retail business during the quarter. It grew 41% year-on-year on a full premium basis, with continued market share gains in retail health insurance. The company remained profitable for the quarter on a full premium basis, maintaining our track record of profitability since financial year 18-19. We achieved the credit rating upgrade from A+ to AA-, reflecting our strengthening financial position. Our digital transformation continues. 96% of policies are issued digitally, and over 76% of cashless claims are processed within 30 minutes. Customer complaints declined as compared to the preceding quarter. The new labor code did impact our financials with an approximate 13.5 crores, which is a one-time charge for this quarter. Now let me walk you through to the presentation. I am on slide number 12. Company achieved a top line of 7,906 crores on a full premium basis with a growth of 21.5%, wherein this quarter retail growth from proprietary channel is 41%. Our AUM crossed 10,000 crore rupees milestone. The investment book increased by over rupees 1,800 crores compared to March 25, driven by business growth and 322 crores of capital infusion in the month of September 25. Company has a solvency of 1.70 as at the end of quarter 3. Our combined ratio improved by 110 basis points on a YTD basis. We have a market share of 9.9% among private players and 22% within SAHI segment. And our claim settlement ratio is 97%. Moving on to the next slide. Over the previous 3 years, we grew at a CAGR of 33%, and in this current year, on a full premium basis, we grew at 21.5%. Our retail health market share continues to expand, currently at 11.4% of the industry and 19.5% among SAHIs. While industry numbers on a full premium basis, they are not available for retail health, but just to give you a perspective, industry grew at 16.5% basis on 1/n for retail health, wherein SAHIs grew at 18.75%, and we grew at 23.3%, resulting into increase in our market share. The organization is a multi-channel organization focusing on all channels, wherein agency channel contribute almost 40% of the total GWP. Our retail book constitute approximately 63%. Now I'm on slide 14. All numbers in this slide, they are on a full premium basis. Our profitability as on December 25 is rupees 265 crores against a PBT of 92 crores in the same period last year. Underwriting results are also improved in this financial year as compared to previous year. The underwriting results, they are improved by 23%. If we remove the one-time impact of the labor code, then the underwriting results, they are improved by 27% as compared to previous year. Claim ratio on a YTD basis has increased by 2.7%. However, combined ratio have improved by 1.1% as compared to previous year. Our expense of management continues to decline as we benefit from scale and digital adoption, and we remain fully compliant with EOM regulations. Our investment book of 10,246 crores is consistently delivering a yield in the range of 7.2 to 7.3%. Moving on to the next slide. Numbers on this slide, they are on a 1/n basis and hence they are not comparable. But just to give you a perspective, under 1/n basis, our top line is lower by 734 crores and profitability is lower by 354 crores compared to full premium basis for the first 9 months. For this quarter, top line is lower by 181 crores and profitability is lower by 200 crores. Now this is purely a timing difference, not an economic loss. Under the earlier accounting, just to give you an example, if we sold a 3-year policy for rupees 30,000, the entire amount was recognized as gross written premium in year 1. Under the new 1/n methodology, we now recognize only 1/3, that is 10,000 in the year the business and the balance 20,000 in the following 2 years. As a result, in the year of sale, our reported top line and profit look lower than under the old method because a portion of the premium and the corresponding profit, they are pushed into the future years. Hence, this is only deferral of premium and profitability will accrue over a period of time. Thank you. We keep on expanding participation. As we also highlighted, we are an omni-channel organization, so we keep on focusing on all the channels within the that are present in the health insurance space. We are investing a lot on the technology, and we are the only company who is commission on a daily basis. We keep on innovating on our products and wellness integration, and we have also started GIFT City operations last. We are acting as a reinsurer for foreign insurance companies. They are based out of Dubai and Middle East, and this is how we are expanding over the years now. Thank you. Yeah, and handing over to the Pratul.
Thank you, Amrish, for this detailed shot. I now invite Mr. Vijay Kumar Goyal, MD of Religare Broking Limited, to give his comments. Just to introduce Mr. Goyal, he joined Religare Broking recently as Managing Director effective February 2nd. He has got more than 30 years of experience in financial services, having spent 11 years with Aditya Birla Financial Services and 16 years with Motilal Oswal. Previously, he was the CEO and broking of distribution, private wealth management business and home finance business with the Motilal Oswal. Before joining Religare Broking, he was self-employed, having a professional practice as an executive coach and business growth consultant. He is a chartered accountant as well as a cost accountant. Over to you, Vijay. Thank you.
Thank you, Pratul. Good evening, everyone. Quick update on Religare Broking. Our revenue YOY was up by 12% from 81.5 crores to 91 crores. Our client debit book, known as MTF, popularly in the market, as well as the short-term debit book, was up by 93% YOY from 165 to 317 crores. The clients traded, unique clients traded, YOY came down by 11% for us. Number industry, at industry level, this number was came down by 12%. So we did slightly better than industry out there. The e-governance business grew by 21% YOY. Now moving on to slide 19. This just shows that our e-governance business is largely franchisee driven and technology driven across the country, where we have more than 50,000 agents selling various small value solutions to a lot of rural and semi-urban clients. Slide number 20. If you move, you will observe that at an industry level, the overall demat accounts in last 5 years have grown from 5.5 crores to now about 21.5 crores. But the active ratio, basically the clients who are trading with the exchanges, has been consistently coming down. In 22, it peaked at 40% of all the clients registered with demat accounts, which has now come down to 21%. Slide number 21. As I already mentioned at the beginning, that our revenue YOY grew from 81.5 to 91 crores. The PBT, profit before tax, grew sharply by about 893% from 70 lakhs to about 6.6 crores. Our net worth is showing steady growth from 350 crores to about 366.6 crores. And assets under custody, which is the demat balances that we hold for clients, is about 42,642 crore rupees. If you look at the Q4 of last year, you'll find a very good growth from 37,847 crores. Moving on to slide 22. Our daily turnover for cash market is 276 crore rupees for the quarter that we are discussing. Our derivatives turnover was about 9,782 crore rupees, which grew YOY as well as from Q4 of last year. Our active clients is slightly down. Active clients basically mean the clients who are eligible to trade as per National Stock Exchange criteria. And the unique traded clients I already mentioned earlier has come down by about 11%, and the fall which is lesser than the industry fall of 12%. Moving on to slide 23. These are our financial numbers. Our income 91 crore rupees as compared to 81 on a basis. Our total income is 274.7 crores as against 299.30 for the corresponding 9 months previous year. Our profit before tax for the quarter under review, 6.56 crores. YOY 0.67 crores. The growth is from 0.67 to 6.56 crores. On 9-month basis, our profit is 16.71 crore rupees this year, as against 35.68 crore rupees for the last year. Moving on to slide 24. We understand that, seeing, as Pratul also mentioned, a lot of retail participation increasing, driven by SIP as well as the prosperity, as well as the digital revolution that has taken place, and that opens up an opportunity for us to acquire a lot of new clients, which we'll continue to do. Focus remains on activating a lot of clients that are already registered with us, and also launching new products on non-broking as well as on broking platforms, as well as investing in a digital platform to make it a very strong and scalable platform. That's it. Thank you.
Thank you, Vijay. We now move over to Religare Finvest Limited. We are on slide 26. Religare Finvest Limited is a part of financial services segment of Religare, and it is categorized as a middle layer NBFC. RFL currently has a core book of SME of 70 crores, which is left, and along with a cash balance of rupees 480 crores. This kind of cash collection has been possible because of our tremendous focus on collections and recovery. Our collection efficiency continues to be 99% or thereabouts. Our net NPA ratio has continued to be very stable and is at 1%, and CRAR, which is the regulatory ratio, is at 228%. This quarter marks continued recovery from the loan book following regulatory cleanup. Asset quality remains stable, reflecting close portfolio monitoring. The focus of the employees also made sure that the organization is ready for the next phase of rebuilding the business and growth, with the leadership team being there. As I mentioned earlier, the cash is available. There is enough capital by way of net worth in excess of 800 crores, and the platform is ready for next business line that we choose to adopt. During the quarter, the board has been strengthened with members from the promoter group as well as addition of independent directors. Coming to slide 27, while it seems a busy slide, all the legacy issues have been resolved now. There are no cumulative ALM in any of the buckets, and our IT platforms are currently getting refurbished to take care of future business needs as and when we restart the business. To take you through the financials, I'll request Mr. Prakash Jajani, the CFO of Religare Finvest, to give his comments.
Thank you, Pratul. Good evening, everyone. I am Prakash Jajani, CFO of RFL. Slide number 28 gives you key ratio over the few quarters. Our total income is at rupees 39.6 crore in this quarter. Our profit after tax has reduced to rupees 1.2 crore in this quarter due to impairment provision on subsidiary investment of rupees 17.4 crore, as well as new labor code provision on one-time basis. The collection efficiency continues to be stable at around 98 to 99%, and NNP are stable at 1%, and net worth is at 112.9 crore. Invest in this quarter. CRAR has efficiently improved quarter-on-quarter basis, and it is 22.8% currently, 228.2% currently. Quickly on the financial slide number 29, our interest income has increased due to improved collection and recovery. We have reported a total income net of finance cost of rupees 39.5 crore against rupees 21.8 crore for the same quarter last year. The pre-provision operating profit has gone up substantially to rupees 21 crore against rupees 40 lakh for the same quarter last year. Profit before tax for the quarter is lower on account of earlier mentioned impairment provision on subsidiary investment, as well as new labor code provision on one-time basis. For the year under consideration, 9 months, the total income net of finance cost has moved up from 53.4 crore rupees to 79.4 crore rupees. The resultant PBT has gone up from 16.4 crore rupees to 49.9 crore rupees in the current year. These are the major financial highlights. Thank you.
Gupta, the CEO of Religare Housing Finance, to give his observations on the results.
Yeah, thank you so much. Good evening and welcome to everyone. Religare Housing Finance Company focuses on the affordable segment with products such as home loans and loan against property with an average ticket size of around rupees 10. As of Q3 end, the AUM of the company is rupees 241 crores with a product mix between home loans and loan against property of close to 70-30%. The collection efficiency of the company is around 97.36%, which is slightly higher than last quarter and with a CRAR of around 132%. The company continues to enjoy investable rating of BB- from both ICRA and CareEdge. Currently, the company works from a branch network of 50 and serves 8 states in the country. The company focuses only on granular retail portfolio and has a strong capital base of close to rupees 100 crores. Externally, there are strong growth drivers aided by government initiatives which are driving the affordable housing market growth at around 13-14%. The company has a stable portfolio. IT transformation of the company is in its last leg of implementation. Moving to the next slide, which is slide number 32, the Indian retail credit growth story is intact with the industry clocking an average CAGR of close to 22%. The affordable mortgage leads the AUM growth with about 15.5% growth. Considering that the Indian mortgage penetration as a percentage of GDP is only about 11%, there is enough and more headroom available for us to grow. The average CAGR clocked by the affordable housing finance industry is around 20 to 22%, which is ahead of the mortgage industry growth percentage. Coming to the next slide, which is slide number 33, we are showcasing the key ratios for the company. For the quarter ended December 25, the company clocked a revenue of 7.1 crores with an average yield of around 15%. The company has a stable GNPA and NNPA with NNPA around 3.5%. The CRAR for this quarter end has reduced from 142 to 132%. If we compare it to the last quarter, the same is on which we have taken from Religare Enterprise. Coming to the next slide, slide number 34, where we are showing financial numbers Q1. The also been brought down from rupees 13.61 crores to rupees 13.04 crores for the same quarter last year. For the quarter ended December 25, the company has booked a loss of rupees 5.93 crores, slightly higher due to the impact of provisioning that was taken under the new labor code. That's it from my side. Handing over to Mr. Pratul Gupta.
Thank you, Rahul. Now that we have discussed the quarter gone by, let me get to the other part where we will discuss about reorganization of Religare and demerger of its financial services business. On 14th Feb 2026 this year, the boards of Religare Enterprises Limited and Religare Finvest Limited have approved the demerger of financial services and insurance businesses of the group into two focused and independent listed entities. This is not just a structural or reorganization, it is a strategic imperative step designed to unlock shareholder value, create business clarity, and position the resulting entities for sustained long-term growth. Let me explain the rationale a bit in detail. This initiative is driven by certain important factors that have converged to create the optimal conditions for this step. First, the takeover of REL by Burman Group as promoters. This development brings in decades of institution building experience with top-notch governance and a proven legacy of value creation. The group's takeover was followed by capital raise announced earlier, which takes care of the funds requirement for the businesses for the foreseeable future. That's the second part, and that takes care of the capital. And thirdly, businesses, as they grow and reach a certain scale, demand specialized focus. We are now at an inflection point where each piece requires and will require dedicated strategic attention. Each business also operates with different capital requirements, risk frameworks, manpower talent, and growth trajectories. Coming back to the presentation, I am referring to slide 36, which is just a refresh of our current corporate structure. As you see, the promoter group on a fully diluted basis after the conversion of recently issued warrants shall hold 29.75% in REL, whereas the public will continue to hold the remaining 70.25%. And as mentioned earlier, we have CARE on one side as an insurance segment, and we have NBFCs, RFL and housing, one below the other, and broking as financial services segment. Just to remind, as far as REL is concerned, its stock is listed on BSE and NSE, whereas RFL is an unlisted entity, and it is registered with RBI as a middle layer category NBFC. Now, if you see slide 37, this demerger is built on 4 pillars. First, streamlined business focus and simplified structure. The segregation of financial services from insurance business is to create a focused entity with specific business model, growth strategy, capital deployment, and performance matrices for the teams. Secondly, unlocking shareholder value through a separate listing. The independent listing of RFL is expected to unlock shareholder value and enhance investor participation. It will facilitate targeted capital raising for this business and enable more efficient allocation of management resources, thereby supporting sustainable growth and long-term value creation by this newly created company. Third, the focused management attention and talent alignment. Post demerger, each entity will have dedicated leadership teams. The leadership teams are already in the hiring mode. They'll require sharper operational alignment and clearer strategic mandates. Decision making has to become faster. Strategic execution has to become more focused. Market responses has to become nimbler. So with these objectives in mind, there was a need to bring in this clarity. This will also help us set up the objectives for the new incumbents as we hire the senior leadership for different components of the business. Fourth, enhance risk management and compliance. The demerger enables implementation of specific risk management policies and internal compliance frameworks tailored to each business segment. This improves monitoring and control of risk associated with them. Now, moving to slide 38, let me just outline the proposed structure more clearly. This is demerger of financial services business from REL to RFL pursuant to proposed scheme of arrangement. The lending, broking and ancillary support services held under REL shall be demerged into RFL on a going concern basis. The investment in CARE shall continue to be retained in REL. As a consideration for transfer of financial services business, RFL will issue fully paid up equity shares to the shareholders of REL in a 1:1 ratio. For every equity share held in REL, there will be one RFL share issued upon implementation of the scheme. The RFL shall thereafter will also be listed on the bourses. The current registrations of REL and RFL with various regulators shall not undergo any kind of change. So what does this result into? This creates two parallel focused organizations with independent governance, capital structures and growth mandates as detailed on slide 39. On financial services side, while the promoters and public shall continue to hold shares in the ratio as mentioned, the resulting entity RFL shall have Religare Broking as its direct subsidiary. It will also have Religare Housing Finance, which is already a subsidiary, as another fellow subsidiary focusing on affordable housing finance. As mentioned earlier, we aim to list RFL in the first quarter of FY 2028 after the completion of the process. For the remaining, REL is as it exists today. The listed entity shall continue to hold its entire stake in CARE Health Insurance as it does today. This demerger will be implemented through a scheme of arrangement under sections 230 to 232 of the Companies Act 2013 and other relevant provisions of the Act read in conjunction with them. The scheme shall also require various regulatory approvals as well as shareholders and creditors' approval. The company expects the entire process to take 15 to 18 months starting from the current quarter and shall culminate in the first quarter of FY28. The detailed timelines can be referred to in slide 40, which is there before you, with various steps being appended alongside. We believe that during this period, there will be no disruption to operations, no impact on customers, and no change to employee continuity. We are committed to ensuring a seamless transition with complete operational continuity. Just to reiterate, post demerger, each business will have a clarity and focus to pursue its own growth path. This has been resulted after comprehensive evaluation of various structural alternatives which were discussed with leading advisors. The board concluded that this particular initiative and option represents the most efficient and future-ready structure for our next phase of growth. Any future fundraising, as and when required, will be undertaken based on business growth plans, capital requirements, and strategic opportunities, and will be subject to necessary corporate and regulatory approvals. Just to summarize, we are creating a simplified structure with independent business segments concentrating on their core competencies. We are unlocking shareholder value through separate listing that enhances investor participation and enables targeted growth. We are enabling better management alignment with sector-specific talent acquisition and performance-linked rewards. We are implementing enhanced risk management with tailored compliance frameworks and strengthened governance. And last but not the least, we are executing this transformation backed by a very strong commitment from the board and the promoter. I thank you all for your continued trust and support, and we look forward to engaging with you as we move forward in our journey. Thank you so much. We are now open to any questions you may have. Over to you, Mansi.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Umang Shah from Avendus Spark. Please go ahead.
Hi, sir. So, firstly, congrats on the demerger proceeding, and my question is related to that only. I'm a bit puzzled why we chose to demerge financial services and not care directly, because when we talk about value unlocking, most part of holdco or discount that is there on care in our overall financials, that could have gone away directly. So any specific reason why we chose RFL and not to demerge care separately?
So, Umang, we have not demerged RFL as such. We are basically demerging the entire financial services business of Religare into RFL. One.
Right.
Secondly, this is a step in the direction, or let's say this is the path towards, the final outcome, wherein we believe that each business needs to operate independently. However, the current consideration before the board allowed us to take this first step, and possibly in future we will take some incremental steps to complete the demerger in the incomplete sense in terms of insurance business. As of now, the structure is that the listed entity REL will continue to hold the entire shareholding of CARE.
Right, sir. So we are planning reverse merger with REL in future after this demerger. I mean, we could have incorporated that in this scheme of arrangement. So any specific reason why we chose to postpone it after 18 months?
Well, I think this is, as I mentioned, this is the first step in that direction. And as and when the conditions are conducive, and there are certain other milestones which are achieved by these businesses, we could be evaluating such options in future.
Okay, sir. Okay. Agreed. No, so I had my question only related to demerger. Otherwise, business is absolutely, it's in your control. So I don't have many questions over there, sir. Great. Thank you so much.
Thank you. Thank you, ma'am.
Thank you. The next question is from the line of Adarsh from Menam Asset Management. Please go ahead.
Hello. Hi. Sir, just a follow-up on the previous question. Is it safe to say that while you can't, you've not put it out, but there are precedents now to Max Financials opting to reverse merge the life company into the holdco? Is that the structure that eventually is so some investor in Religare does have access to CARE directly? Is that the final outcome? Is that a fair assumption to make?
Well, as I mentioned, Adarsh, I mean, we will decide about future course of action as and when conditions and situations are conducive. There could be many possibilities. As of now, our endeavor and our this particular step where it has brought us to is that in the resulting structure, Religare Enterprises would just be holding one asset, which is CARE. So that itself and the fact that, there will be an issuance of a RFL equity as well, that itself should be value accretive for the shareholders. In the future, we could be looking at various options, including the one you mentioned, but the current thinking is to first implement this particular scheme in next 15 to 18 months.
Got it, sir. And the second thing is the infusion of 1,500 crores. Has that money come in, and in what form it was put to use? Which businesses have got the capital? If you can just highlight that.
Sure. So out of 1,500 crores of warrants which we raised, so far as of the end of the quarter, we have received 410 crores, which included 375 crores of upfront premium and another 35 crores of conversion of warrants. Out of this 410 crores, 256 crores has already been infused in CARE by way of subscription of rights issue, which the company had opened. And the rest of the money has been given to other subsidiaries, including broking and housing, in the form of loan, apart from a part of funds which has been utilized for operations of REL. Since you mentioned the figure of 600 crores, let me clarify and assure you here, whatever money has been envisaged for different businesses in our shareholder resolution for warrants issue, all that money is part of this implementation scheme to be directed towards those very subsidiaries. So there is no change of plans there. And as envisaged, CARE will get an investment of up to 600 crores as per the original plans.
Got it. And sir, then I just, if you can lay out over a 2-3 year period for the broking, NBFC and the housing business, what are the broad aspirations, plans over 2-3 year period? You do have unutilized equity there. And you're talking about another 900 crores, which is 1,500 minus the 600 crores. So it's a lot of equity in the broking or NBFC or the HFC. So if you can just highlight what the plan and the use of capital there would be.
Sure. So I think during my narration, I did mention that the leadership for these businesses is coming into place. But very broadly, what I can tell you is that most of the accounts are right now unleveraged. So if I look at Religare Finvest Limited, we are sitting on a cash of 500 crores, completely unlevered. So as and when we start the business with new leadership team coming in place, we are definitely looking at levering this to industry standards in next couple of years. That's the aspiration. In terms of housing, again, right now we don't have any lending lines, and we have aimed to infuse a large sum up to 250 crores in housing finance. So there also we are taking steps to start leveraging there and get banking lines and expand the franchise to a much larger number. In terms of broking, we just have the company of Vijay. He is right now evaluating the business on a 360-degree basis. And I am sure by the time we interact next time, we will have more details on our side to discuss in terms of broking's expansion plans.
Perfect. This is useful. Thank you.
Thank you. The next question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, Nitin, please go ahead.
Yeah. So actually to see the demerger scheme and the things that you explained, you mentioned that that there are certain parameters and certain milestones that you would like to see before next steps can be taken. So can you elaborate more on that? What are the things in your mind before you take up the next steps?
I mean, some of the milestones pertain to how we sort of grow this business and what is the growth trajectory we are looking at, what kind of holding structures are there. So there is a promoter group above Religare Enterprise. We also need to see what are the regulatory thresholds we need to sort of keep in mind in terms of minimum shareholding requirement. So some of the considerations need to be in place before any incremental steps could be taken in that regard. But we thought and we evaluated that this is a good, credible first step in that direction.
I got it. So do we have any doubts about the growth trajectory? That's why we are thinking in this way. Are we too conservative in taking the decisions?
Well, I would not say that we are conservative, Nitin, in terms of taking the decisions, but we want to take the decisions after thinking hard and making sure that the decisions are right to the norm. So the idea here is that we evaluate each and every situation with a complete 360-degree approach, and thereafter we implement it. So that's the approach the management and the board has so far.
Okay, got it. Wishing you best.
Thank you.
Thank you. The next question is from the line of Yash Bhandari from Neo Wealth and Asset Management. Please go ahead.
Yes, Yash.
Yash Bhandari, please go ahead with your question. Your line is unmuted. As there is no response from Mr. Bhandari, we'll move to the next question, which is from the line of Hitendra Pradhan from Maximal Capital. Please go ahead.
Hi. So first question on the demerger.
I'm so sorry to interrupt you. We are unable to hear you clearly.
Is it better now?
Yes, Mr. Pradhan, please go ahead.
Yeah. So first question on the demerger. So I think there is a IRDA requirement of promoter shareholding, which I think along with the private equity investor at the care level we could have probably met. with the fund infusion also happening in place in REL. So, was there a reluctance on part of the private equity investor to be the promoter for CARE, because of which we could not have done the overall demerger in the way it would have captured the entire value?
Well, without specifically commenting on a particular stakeholder or participant, what I would like to say is that there are certain conversations, certain situations which need to be sort of achieved before we take that step. So you are right in terms of the fact that the look-through shareholding of the promoter group today in CARE is at around 18 to 19%. However, there is a thinking to move ahead on that, and at an appropriate time, we will be able to come back to the shareholders with the decisions about it.
Okay. Secondly, sir, with REL, there was this ongoing case with LVB fixed deposits, which were sort of captured by them. So, what is the current status of them? Because I think LVB has been taken over by DBS. And so, when you report your net worth as 800 crore, is it what happens to that 700 crore? Is that something that we are going to collect, and then that will add to this net worth, or what is the situation there?
So as far as LVB is concerned, Hitendra, so the matter is sub judice right now in Delhi High Court, and the LVB has been replaced by DBS since LVB was taken over by DBS. So DBS has replaced LVB in the court. In terms of any resolution, I think we are still some distance away, and the matter is being taken up in Delhi High Court right now.
No, so this net worth of 800 crore is assuming you have already provided 700 crore for the LVB account.
Yes.
Yes.
So we have already provided for LVB provision, so we have not anything outstanding in books of account. The 800 crore net worth is over and above this.
Yeah. So entire FD amount, Hitendra, of 750 crores has been provisioned in RFL books.
Okay. And roughly at the RFL level, now you had so many bad loans. So what is that collectible pool in totality, and what are we planning to do about that? So what is the expected recoveries from those accounts, let's say on a per year basis going forward?
So if you see in our presentation, the AUM from the SME book is 70 crore rupees, and whatever the bad loan which are there, we are already in the case with lot of litigation is there. So we are fighting in the case, and as and when we get the favorable order from the court, we will recover from the money from all the litigations.
So on a conservative basis, Hitendra, just to add here, while the current cash position of RFL is above 500 crores, and the good book which is left behind is around 70 crores, then there are certain accounts where there is a view that there could be certain recoveries. If we step back into the corporate loan book side, that entire corporate loan book has been so far provisioned. However, there is a dedicated collection team which is making efforts and looking at various options in terms of recovery. However, at this point in time, we are not in a position to give you any target recovery number here.
Okay. And sir, IFRS results for the insurance company. So normally, some of our comparable companies are giving out IFRS 1/n and with and everything. In our case, we have given some operational parameter without 1/n, and then we have given IFRS Ind AS So what are our IFRS numbers? It would be great if it can be put in the presentation going forward. But as of now, for the 9-month FY26 and 25, what is our IFRS PAT?
No, Hitendra, hi, I'm reached this site. So we're in the process of preparation these IFRS numbers, and maybe from next quarter or next quarter, we will be publishing those numbers.
But roughly, can you give us an idea of what is that number right now?
No, I think I'll still say that we are in the process of preparation of those numbers, so would not like to comment on that.
Okay. And sir, finally on the broking piece, so normally, all the brokers, trade at very high ROE numbers, and in our case, it is single digits. So, is it because we are very suboptimally utilizing our expense base as of now? And what is the program to sort of increase it to, let's say, 25-30% ROE number, which is very common amongst brokers?
Okay. From broking side, yes, we seek to definitely increase the productivity of the infrastructure that we have. And there is definitely a scope to do that. And going forward, we are going to work on that. And what was your second question about this infrastructure? And
so basically, sir, we are having 6-7% ROE, right? So I wanted to understand, is there a pathway and how quickly can we go to a normal ROE for a broker which is in the vicinity of 25-30%?
That number we have not done as of now. As Pratul mentioned that I have recently joined and I'm just understanding the business right now. And we already have a large client base and our active client ratio is less than the market. So I showed a number that at industry level we have 21 crore demat accounts and about 21% are the traded clients. For us, that number is about 14%. So there is a headroom available for us to increase our active client. That's straightforward result into the business growth. For us, the ROE numbers we have not worked out. Right now, our priorities remain to improve our digital offering as well as our presence in our large cities and work on the productivity of our resources that are already deployed in the business. I don't know, but we will take some time before we start working on the ROE numbers.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Ravi Purohit from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for giving the opportunity to ask question. Congratulations, Pratul, on the restructuring announced. Just follow up on the earlier participants' questions on the way we have structured this. So IRDA I think has some ruling of 25% being the minimum shareholding required to be classified as promoters. And I think you just mentioned that the Berman family, at the current see-through holding is about 18-19%. Is it fair to assume that they will have to increase their stake in REL itself to basically qualify as a promoter of Care Health at a future date, if at all, once that has to be merged into this? So is there an intent on that that if you could just share?
Ravi, thanks for joining. I can't comment on behalf of promoters here. So I think this is a question best left to the wisdom of promoters here. What we understand is that REL will continue to be promoter of Care as it has been so far, and any kind of future thinking is a prerogative of the promoter group. And I think at a point in time, they shall come back to us through the board with their state-of-the-art thinking is what I can observe right now.
Yeah, so Pratul, just one request, since this handover or the takeover has just concluded, right? It's been like 2-3 quarters now. Is it possible for the Berman family to also kind of join one of the calls, if not all the calls, just to kind of share with the shareholders, their long-term vision? Because this company has been kind of under hammer and battle for the last I don't know how many years now, and it's just like finally some path is being kind of drawn for its future. It would have been helpful if if the Berman family, one of the members, could at least have like one call or interaction with investors, just to kind of share with them what is it that they're thinking, what is it that their long-term vision about this company is, right? They hold stakes in Aviva Life, they hold stakes in General Sompo Insurance, right? So there are a lot of smaller stakes or, that they own where they are not promoters of those insurance businesses. So, is this like just another of those, or is this something that they are seriously looking at building over a long period of time? If you could just share our message and concern to the Berman family and, request them if they can participate in one of the calls, and, just share their thoughts with the investors, it would be great.
So, sure, Ravi, your request is noted and it will get communicated to the promoter group. I can assure you that. Thank you so much.
Yeah. And so next question is, on Care Health Insurance, right? And I think one of the participants had also asked about IFRS numbers. Again, that is so, in one of the slides we have discussed without 1/n, where our profit before tax for the first 9 months is about 265 odd crores. Whereas on a 1/n basis, there is actually a loss right now, right? So while we understand that the IFRS numbers are still not done, but typically what we've seen is the IFRS numbers generally tend to be slightly higher or significantly higher than the reported numbers. So is it fair to assume that the IFRS profits and IFRS numbers are better than what we've reported on without 1/n basis? And is it a business which actually makes a decent ROE, double-digit ROE as we speak today, or is that's not the case as of now?
So Ravi, on ROE, I think in the previous 3 full financial year, our ROE was always in the range of mid-teens. This year, as you rightly mentioned, the numbers are 265 crores on a full basis against 92 crores. But again, on IFRS numbers, again, will not be able to comment on that on the assumption that that the numbers would be higher than the numbers reported on a full premium basis. So we'll come back to you on that once the numbers are ready.
Okay. Just one request, same, Pratul, just like, for what we mentioned about Religare. If Anuj can participate in one of the calls and share his wisdom, and he's been one of the founder, investor, CEO, MD of the company, and has kind of set up this company, ground up. So it will be great to hear his vision also, right? For incoming shareholders. See, Religare has a very, very long history and baggage, right? So it helps and gives investors also something to kind of look forward to when they hear, straight from the horse's mouth what their long-term vision is. And these guys don't have to come every call, right? But they can just come once at the beginning of the journey and express their thoughts and vision with shareholders. And I think it will be a great initiative. You all are already doing a great initiative by holding these con calls such early in life, corporate life of Religare under new management. But I think if one of the calls, someone from the Berman family and Anuj can come and address the investors, I think it will be great. I think it will go a long way in kind of, us being able to share their vision of what they want these companies to become over a 5-10 year period.
Sure, Ravi. Your suggestion is again noted, and we will make sure that it is communicated to the management, definitely.
Okay, sure. Thanks a lot. And I'll get back in the queue.
Thank you. The next question is from the line of Vikas Srivastava from RBC Financial Services. Please go ahead.
Yeah, thank you for taking my question. So my understanding clearly of the IRDA law is that for a reverse merger, there has to be a promoter with 25%. So every which way, this reverse merger cannot happen till the promoter owns 25% of Care. And as of now, the look-through is only about 19%. I'm just making a statement. And would you confirm that? That's the law.
Well, I think
IRDA law today.
Well, yeah, it's established law. So
it's established.
As of now,
well, just for many of us investors are not clear on law, so we needed to. Just my second question was on the stock options of the erstwhile CEO? If there's any progress, what is it worth, or in terms of percentage of care, and in terms of clawback and the case going on, if you could provide us an update. The second question on insurance was that, there seems to be a little bit of worry in the investor's mind on, IFRS numbers not coming and the insurance business not doing too well. If you could kind of say, is this just a procedural delay because post all this happened? Is it just a procedural delay? And how are we doing as compared to the industry, both in terms of growth, in terms of costs, etc.? If, some kind of comfort without giving specifics as to how is the care insurance business doing? Those are the two questions on the insurance business.
Well, so I'll get care management to respond on IFRS, but before that, since you mentioned about the ESOPs of erstwhile chair, I presume that's the query you have. And the matter right now, Prakash, is sub judice. As of now, what we understand is that there is a IRDAI ruling on that, and the matter is lying in courts. It is public knowledge that ESOPs to the tune of more than 2% of the equity of care health insurance was granted to her. And we also understand that the one-third options which were exercised by her currently are something which is a subject matter of discussion in the courts as well as with the agencies. The unvested, unexercised portion, which is two-thirds of the ESOPs, is something, so there is no transaction which has happened as far as those ESOPs are concerned. Amish, you want to comment on?
Yeah, now on the performance, Prakash. So as we presented our numbers on a full premium basis, which is without 1/n, because 1/n is just an accounting change, and we also take all the calls basis full premium basis. So as we highlighted, our growth on a full premium basis is 27% on a total GWP. Our retail health has improved by 41% in this quarter, which was a significant growth as compared to previous quarter. Our profitability numbers, they were 265 crores, and our combined ratio has also improved by 110 basis points. So all financial metrics, if we look at it the way we used to present our numbers earlier, they have been improving, or they have improved in this financial year. And and on the EUM side, it is coming down. It has reduced by 150 basis points, and we are also well compliant with the EUM regulations as well. So as far as the performance of the business is concerned, we are quite satisfactory with the way business is doing.
That is comforting. My name is Vikas. Now, just coming to the demerged part of the business, I'm again reconfirming. What I understand is that no legacy amounts are still in the balance sheets as assets. They have all been written off. Whatever we recover would be a bonus. And just back of the envelope, totaling I was doing while you were speaking earlier, is my understanding right that after writing off everything, the DB, the Lakshmi Vilas Bank, and all the earlier loans, the book value of your demerged business is about 70 to 90 rupees a share, is my understanding. Would that be right, approximately, give or take 5-10 crores here or there? Because you have it, and also, would that also, sorry, let me just complete. Also, would that include I'm assuming out of the 1,500, 900 crores is going to come, you said 600 you are allocating to the insurance business, so that all the other 900 would come to the demerged entity. Just before and after, with the 900, without the 900, what is the book value of our assets there? In the sense that, what is the cash, what is the surplus cash? Where are we with or without this 900 on all these companies combined?
So, Vikas, as I mentioned, it will be difficult for me to give you the share price or of the resulting company. What I can tell you right now is that RFL currently is, as I mentioned earlier, sitting on a cash of 500 crores plus. The total net worth is 800 crores plus. The net worth of Religare Broking is over 350 crores. It is approximately 366 crores. In case of RFL, housing is assumed there. Then on top of it, you are right, a large part of 900 crores is going to flow towards financial services business. So apart from some operating expenses, the remaining amounts shall flow towards financial services business. So,
okay, so that, no, I was not asking you for the share price. I was only talking about net worth. Yeah. I got that. So that pretty much tallies with my.
Directionally, you are right, Vikas. Directionally, you are right. But I mean, I'll leave the back of the envelope calculations to you. I would ideally like to come back to you with more precise numbers sometime later in future.
I appreciate that. Now, last question. You have been very helpful. So just this last question. Last call you said that with DB taking over LVB, and again, this LVB, though it is it is sub judice, there has also been there's a commitment that 50% of the, this was an FD and interest, and you did mention on the last call that we have a very strong case, and DB being a stronger bank, you did express an opinion that your case was very, very strong. Is there any possibility of an out-of-court settlement? Are we discussing it, or are we just going hammer and tongs since our case is so strong? Are we going hammer and tongs on the High Court case? Is it also that since it was a FD with a coupon rate, the probability of getting interest is high? And my last question on this is that you have a transaction with 50% of the principal of Deutsche Bank, 70 and 50% of the interest has to go to the erstwhile lenders with whom you made an erstwhile settlement. Even if I reduce that amount also comes to about, again, back the envelope, and you don't need to comment on it, is about 700 crores. Our share, Religare shares of 450 plus 250. Even this would, I'm assuming if and when it comes, it would also accrue to the other, to the demerged business.
So I've got the General Counsel Babu here with me, and I would actually request him to give his observations as far as DBS matter is concerned.
Yeah, maybe the numbers you could comment on.
Sure.
Yeah,
sure.
We'll not be numbers commenting. See, the thing is, first of all, I think these are all written off accounts, right? From our books, actually, it has been already told. So matters are subsidized, and we are companies putting all efforts to recover its money, right? Whatever we'll get it, and in that process, that can be out of court settlement or within the court, whatever it is. We are open, but at appropriate stage, I think we'll be considering all those options. And secondly, on this thing recovery, I think we, as you already sort of noted, that is actually we have a strong case. We will be, I think, putting all our efforts to recover the money fully. And the third point is that on the sharing of this money, some money to banks and all, as per the agreed agreements, terms of the agreement, we will be honoring those commitments also.
Which you have to, which is fair. Got it. And the numbers, if I ask you, has somebody made a calculation that what is our share with accrued interest till date? The principal and interest, what is...
We can calculate anything and everything unless and until we see the color of the money, then there's no point in the
No, the color. As an investor, Mr. Babu, color, that is why investor invests for future probabilities.
I agree, but the thing is,
color of the money, yes, will come.
I'm sorry to interrupt you, Mr. Srivastava. May we request you to please rejoin the queue? We have participants waiting for the turn.
Thank you. No, thank you very much. This is very helpful.
Thank you. The next question is from the line.
I'll just make an observation here. Let's see some progress and then have this discussion, Vikas. Thank you so much.
Thank you. The next question is from the line of Rohan Jain from Blue Nile Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Can you speak a bit louder?
Yeah. Am I audible now?
Yes. Go ahead.
Yeah. I had a question regarding the lending and broking businesses. So, with regards to those two businesses, are we largely done with the leadership hiring there, or are there any further, leadership hiring left in those two segments? And again, what kind of scale up are we seeing, or do we foresee in those two segments? If you can just share some more qualitative color on what is the plan for the ramp up of those two segments, please?
Sure. So, well, as I mentioned, Vijay is already here as far as broking is concerned, and some more leadership hiring is in the offing. You will hear from us very soon, both on broking and lending pieces. As I mentioned, that we are looking at industry leaders who approach the business in a bit of an entrepreneurial way and have long-term commitment to expand the franchises multifold. In terms of our targets for expansion, we would let the new leadership decide what could be the milestones or goalposts. As Religare, we are committed to provide the capital and the right platform for these business leaders to grow the business. As I mentioned earlier during my narration, both broking and our MSME lending business can be leveraged much more. And as we move forward, we would like to utilize that opportunity and expand the franchise multifold.
Thanks a lot for the answer. And then a small request, as one of the earlier participants had highlighted, it would be great if Mr. Anuj Gulati and / or the Dabur promoter family, they could join the call and share their thoughts on how they look at their respective businesses going ahead. It would help us as minority shareholders better understand where the business is going in the next few years. And secondly, in the IFRS bit as well, if disclosures can be improved, not just with regards to IFRS, but if I were to compare your deck with those of your peers when it comes to the insurance piece, there's a lot of, I think, gap there as well. If that can be covered up also, it would be really, really helpful with regards to other disclosures within the insurance business itself. That's all from my side. Many thanks.
Sure. Thanks, Rohan. All suggestions noted, and we will come back to you.
Thank you. The next question is from the line of Chintan Mehta from Punishka Family Office. Please go ahead.
Thank you so much for the opportunity, sir. Sir, my question is regarding shareholder threat of large equity dilution at a demerged entity of NBFC division. So, for example, last equity dilution of 15 because of support.
I'm sorry to interrupt you, Mr. Mehta. We are unable to hear you, sir. Your voice is breaking.
Yeah, it's now how loud and clear? Hello?
Yes, please go ahead.
Shareholder threat of large equity dilution at Religare NBFC division. So, for example, last equity dilution of 1,500 crore, we have taken it 2.723 book value. But if demerger of financial services into separate entities and it does not have a right equity listed valuation, then we need to take a very large equity dilution at a very low multiple. So, how we are going to mitigate that risk? If you can broadly explain that would be great.
So, if I have got your question right, Chintan, you are possibly asking about any future dilution on the financial services side, right? So, as I mentioned earlier in my narration, that the financial services pieces are very well capitalized, and we did the last fundraise by way of warrants preferential very recently, and the warrants conversion, a significant portion of it is yet to happen, and the money is targeted towards the stated end goals. So the focus for the management right now is to utilize that funding to grow the business, expand the franchise, and then look outside for any kind of a strategic capital. So our belief is that we will make these businesses scalable, and at an appropriate stage, we will step out for any incremental fundraise as and when required, which will be value accretive for all the shareholders.
So before the demerger, what is the AUM target we are expecting or something in next 18 months? Because that will set up our base to take further equity dilution if needed.
So as I mentioned, I mean, if we look at RFL, we are yet to restart the business, and there is enough capital to do so, and then we have the ability to leverage that further. So we would take those baby steps and look at the first 18 months in terms of growth trajectory. And once this scheme is implemented, then we will chart out our incremental capital raise plans and come back to you for the same.
So, sir, any particular date when we are going to first disbursement of the new division? Any next 1 quarter, next 2 months or something?
Sorry, I completely missed the question, Chintan here.
So when we are going to start a disbursement in this NBFC division?
As I have been mentioning that, we are just getting the leadership in place. You will hear from us soon. Once the leaders are there, then the business plans shall be there, and we will announce, we stepping back into the market as far as MSME loans are concerned. On the housing front, we continue to be in the market and disperse the loans.
Possible in next 3-6 months or roughly, you are talking about too long. You have taken control of last 1 year or so. So,
well, Chintan, I can't really comment on month-on-month or quarter-on-quarter expectations, but as I said, a lot of legacy issues are out. There is much more regulatory clarity. If you see, we achieved our cap removal a couple of quarters back. There is a collection machinery which is already working overtime. So to our mind, we are sort of seeing convergence of various efforts, and it should finally culminate into a tangible startup of the business very soon.
If I not get the perfect numbers or something. Okay, thank you so much, sir.
Sure. Once we have decided and we sort of take those steps, definitely we will be communicating the same to the markets and to you, definitely.
Thank you. The next question is from the line of Sugandhi Sood from BTH Partners. Please go ahead.
Yes, thank you for taking my question. This is with regards to the insurance business, and I'm referring to the public disclosure that CARE does in line with other insurance companies. If I look at the numbers on a quarterly basis, there seems to be a deterioration in the claims ratio, and even on a 9-monthly basis, the PAT numbers that I see in the quarterly disclosures are, I'm not able to reconcile them with the numbers in the presentation. So, on my rough calculation, the combined ratio quarter-on-quarter has gone, the claims ratio on quarter-on-quarter has gone from 70 to 75%. So, if you could just, and also the solvency, I wanted to understand in insurance, how comfortable you are with this level, and, post the capital infusion, what in your calculation would be the solvency ratio?
Yeah, hi. So the numbers that you're referring are on a 1/n basis, wherein we are seeing that because of this accounting impact of 1/n, which I mentioned in my presentation as well, and because of the deferral of premium, which is resulting into lower net earned premium, we are seeing these elevated numbers on the claim ratio side as well and on a combined ratio side as well. But when we look at our numbers on a full premium basis, all the financial metric you are seeing, they are much better as compared to previous year, be it combined ratio, be it expense of management ratio, be it profitability, be it growth, be it retail book growth, and be it expense of management as well. So on a 1/n basis, the numbers, it is only a transition impact because which I gave an example as well in my opening remarks as well, that if a business which is to be rupees for 3,000 rupees is booked, is a long-term business. Earlier we were allowed to book entire 3,000 rupees. Now we can book only 1,000 rupees, and hence the 2,000 rupees got deferred. So as on date, close to 1,400 crore is deferred on the premium side, which has given a negative impact on our earned premium, and hence we are seeing these elevated numbers. But on a full premium basis, the way we take all the decisions in our organization, all the financial metrics they are looking good. You can refer our presentation as well, which is on slide number 14, and you will be able to see all the numbers on a full premium basis.
So, sir, have you disclosed the number on the basis on which the regulator has mandated in the current presentation? Could you refer to a slide which is more like for like in line with what other players report?
Yeah. So slide number 15 is the numbers which are basis 1/n, wherein for this quarter, as you're mentioning, the claim ratio is 75%, and for the 9 months ended, the claim ratio is 74%. And the combined ratios are also 111.1% against 101.1% on a full premium basis. So this is a slide wherein which is as per the regulatory accounting.
Sure. And are there any one-offs in the other expenses? Because I noticed that there is a spike in the GST costs. Is that a one-off number? I mean, it's about a 2% impact on your expense. 2% as a percentage of your net earned premium. Yeah.
So one-off number is only with regard to the labor code impact, which is 13.5 crore. The impact on the GST, I'll say is coming out of the distribution cost, wherein the distribution cost has reduced and the expense is being shown as a GST expense in the public disclosure, but it does not impact the financial position of the company, and also at the same time does not impact the distributors as well, since we are seeing the elevated number of policies, elevated number of growth which is seen in this quarter. So I'm sure that on the distribution side as well, distributors' income will also not get affected on a long-term basis. So this 58 crore number which you are referring on a GST side is not a one-time number. It is only coming out of the distribution cost only, which is because of this GST exception.
Sorry. So on an ongoing basis, we can expect the expense ratio to stay at the current level as the previous quarter.
So on an ongoing basis, very difficult to comment because the expense ratio depends on various factors. So in case there is a heavy growth on the retail new business side, and the expense ratio tend to improve. So I think the right metric is to look at the combined ratio, which is the right metric to look at it. But yes, on a steady state, you're right in saying that the number should be in the same range or should reduce slowly, should keep on reducing slowly.
So, and on the solvency margin, have you post capital infusion, where do you expect it to, be closed? And will that leave room for growth for, how many, years you think that would be enough for before you need further capital infusion?
So I think we are comfortable at the range of 1.7. So we'll continue to maintain in the similar range of 1.7 to 1 or above 1.7.
So post capital raise, you are saying that would suffice for for managing the current growth rate, without risking a decline in the solvency margin.
No, I'm not saying that without any capital infusion we would be able to.
So I'm asking post the 600 capital infusion that was outlined before.
So I think we have various options to maintain this solvency. We have a net worth of close to equity of 2,000 crore. We can raise sub-debt up to 1,000 crore, and as Pratul also mentioned that out of 600 crore, 250 crore has been infused in care health insurance. So I think there are plans to take care of that, but the solvency will continue to maintain solvency at 1.6 or upwards of that.
Sure. Thank you, sir. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to management for closing comments.
Thank you, Pooja. It was a very detailed session we had with investors, and I thank everyone for taking out time and listen to us and understand our journey. If there are any queries further, there are contact details in the presentation where you could send in your queries, and we will be happy to respond. We look forward to our continued association and hope to see you next time with our year-end FY26 results. Thank you so much. Back to you, Nancy.
Thank you. On behalf of Religare Enterprises Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.